we had Vineet Rai, who was our scheduled keynote speaker, who was going to be, delivering the keynote address today. He is the group chairman of Aavishkaar Group, but because of some unforeseen circumstances, he is not going to be able to make that keynote address. So he has, passed the baton on to Anurag Agrawal, from the IntelliCap, which is part of the Aavishkaar Group, from Aavishkaar Capital. Yeah, and just a little bit about Anurag. He is a partner at Aavishkaar Capital, which is the impact investing arm of the Aavishkaar Group, and he has been a founding member of the group company itself from the time IntelliCap started, right? So it was many years ago. And he last served as the CEO of IntelliCap. In addition to serving on the board of the group holding company, Anurag represents the promoter's interest on the board of group companies. That is a really amazing, very, very wide portfolio. And I'm sure, Anurag, you're doing a lot of justice to it. So we're just very privileged to have you here with us today to deliver this keynote. And thank you for taking this responsibility over at a very short notice. Yeah, and everyone is really eagerly looking forward for you to speak about the role of finance in circularity, and also your experience at Aavishkaar Group and in the 17 years that you've been with the group. How has this group unfolded its circularity agenda? So without any further delay, over to you, Anurag. Anurag, we have about 15 minutes for you to speak and about another 10 minutes for Q&A. Sure. Yeah, so I'm going to hand this over to Anurag. All yours, Anurag.
All right, thank you so much, Shakti, for that introduction. Hello, everyone. I hope I can do justice to this session in Vineet's absence. So I'll do my best, and let's try to keep it interactive. So if there is any question, I'm happy to take it. So what I thought is maybe I'll just cover this session in 3 parts. Firstly, I'll just talk a little bit about our own journey at Aavishkaar Group and what we've done, and I'll try and draw some parallels to some of our experiences with what we are seeing in the circular economy space. Second, I'll talk a little bit about some of our interventions in the circular economy space. And third, focusing on the topic at hand, talk a little bit about financing options and what's happening on the financing side in the circular economy space. And feel free to at least the audience that is here, if there are any questions, happy to take them as I go or at the end. Right? So quickly, as Shakti mentioned, I've been part of this Aavishkaar Group for about 17 years. The group itself was founded by Vineet back in 2001. He set up Aavishkaar Capital with this whole idea of taking risk capital to rural India, essentially underserved geographies, underserved markets. And it was sort of a pioneering attempt because the word impact investing didn't exist at that point of time. It is now called impact investing. But the idea was to engage with businesses that are operating locally in these geographies and see if you can create local employment opportunities, livelihood opportunities through those businesses. It wasn't a philanthropy activity. So a lot of the development work that used to happen back then in the early 2000s was mostly through not-for-profit. So this was a for-profit initiative, raising commercial capital, risk capital, investing in small early stage businesses in very remote rural geographies. Venture capital itself was new in India, but we were trying to do one step even further than that, and do it in a commercial way where you're looking to also generate a financial return and at the same time create a lot of social impact. So impact continues to remain core to everything that we do at Aavishkaar. So apart from the Aavishkaar Capital, we also set up something called intellectual capital. So the theory was that apart from financial capital, you also need the human capital to go along with it to make a meaningful difference. And that is what intellectual capital stands for. And this was set up in 2002, but did very little or nothing till 2004. In 2005, there were about 4 or 5 of us who came together and we started working on, at that point of time, it was a question of survival. So Aavishkaar Capital was set up with a as registered as a trust with SEBI with 5,000 rupees, and intellectual capital was set up as a private limited company with 1 lakh rupees. So that was the total capital. All of us were under the age of 30. We had a lot more hair on our head back then. So that's how we started. And the first area that we really got very involved in is in the financial inclusion space. And I'll talk about that journey. I've been involved in that space for about 17, 18 years. In fact, even before joining IntelliCap, I was involved with ICICI Bank, which was at that point of time one of the largest players in that space. But that whole space was all put together about 500 crores in India. Today, it's at about 3 lakh crores. So that's the kind of growth that sector is seen. We have been very closely involved from the advisory side, consulting, incubating, investment banking and investing, and then actually going and acquiring a microfinance company. So we also run a microfinance company ourselves called Arohan. This is headquartered out of Calcutta. It's a company that we acquired in distress in 2012. It was about to shut down in 3 months' time. We turned it around. Today, it's about 4,500 crores of assets, serves over 2.2 million women customers across the low-income states of India. And even there, we do some funding for circular economy. So I'll talk about it when I talk about financing options, etc. And then we have Ash, where we are sitting. This is the corporate office of Ash, which is basically a tech-enabled digital lender for MSMEs. So this is one segment above microfinance, and even there, we are trying to bring various parts. So, we have a special initiative from IntelliCap called the Circular Apparel Innovation Factory, where we work with a lot of early stage, and you will, of course, hear more about it from Venkat, I guess, in the next panel. But we're trying to cross-pollinate, incubate certain things, do these partnerships, and also do funding from organizations like us to provide financing support. So that's in a nutshell. So starting from that 1 lakh and 5,000 rupees, we are today managing close to about 10,000 crores of assets across these different businesses. So we are entrepreneurs ourselves, but from the fund, we've also funded 70 odd companies, more than 1 crore of beneficiaries across these different companies, and lots of livelihoods generated, lots of carbon emissions. So they're very specific impact metrics that we track and keep reporting on an annual basis in the form of our impact report. So we'll encourage you guys to look up our website and also download our impact report. So that's about the group. This is where we are. From the group itself, while we focused on social impact to begin with, and our focus was mostly on low-income populations, and how can you, work with businesses that are engaging with these low-income populations, either trying to increase their income by providing employment or livelihood opportunities, or reducing vulnerability in some form by providing them access to affordable healthcare, education, clean energy, water, sanitation, right? So this was the original concept, but over the last few years, we've sort of expanded that dimensions of impact also for ourselves. So apart from the social upliftment and economic upliftment, we also very closely look at gender as a key vector for impact. So there's a lot of initiatives that we are currently focusing on for gender parity. In fact, Aavishkaar is one of the first funds in Asia to get 2x gender 2x certification, right? So there are specific goals for gender parity, both within the company as well as the investments that we make. So that's another core area. And the third key dimension for impact for us is climate action. So again, lots of interventions that are focused on that. I'll talk about 3 specifically. One, the Circular Apparel Innovation Factory. It's now almost run independently like a separate business under IntelliCap, focusing on the apparel industry and trying to work with the various ecosystem players there, and trying to make it more circular and less harming to the environment. So Venkat will probably cover that in more detail. The second key initiative from our side has been around our investments, through our investments from Aavishkaar Capital. So we have probably created pretty much from scratch what is today India's largest dry waste management company. This is a company called NEPRA. In fact, I'm fortunate enough to manage that company, and I also sit on the board of that company. So this is a company, which is based out of Ahmedabad, but expanding across India. They focus exclusively only on dry waste, and they are able to divert 100% of the waste that comes to them away from the landfill. So everything is recycled, and it's a great example of the circular economy. We funded this company back in 2014 when it was very rudimentary operation, completely manual driven. And today this company is set up these large material recovery facilities. So a lot of automation has gone into it. A lot of capital also has gone into it, which is able to basically process this waste at scale. And it's also extremely profitable, by the way. So it's very capital efficient. It's today processing close to about 600 metric tons of waste per day. And there's a lot of learning that has come to us through that. So we are actively looking at several other opportunities in the circular economy space, not just on dry waste side, but also on electronic waste. That's another big area. Electric mobility, batteries, recycling of that. So again, that's a key focus area for us from the fund side as well, going forward. And within the fund, so I mean, we are currently on our 8th fund overall, 6th fund. But one new announcement that some of you might have seen in the press recently, Aavishkaar is launching something called the Aavishkaar Nature-Based Solution Fund, or Aavishkaar Carbon Fund. And this is again a very, very unique initiative. I don't think there's anything like this that exists in India. We are essentially going to fund people to plant trees, or basically sequester carbon from the environment. And we believe nature is right now much more superior to anything else that exists in terms of technology. So this is a fund which is, we're still in the process of developing of that fund, and we're still talking to some of the key anchor investors who will come into this fund. And at the same time, looking at possible pipeline companies for that. We will give money, and this is going to be extremely long-term, 15, 20 years kind of duration. We'll give money to people to plant trees, and we will not expect that money to come back from the entrepreneurs. Instead, the carbon credits that will get generated out of that activity is what will generate a return. So it's again not philanthropy, but a different way of thinking and different form of financing for something like that. So these are some of the key initiatives that we are taking from the Aavishkaar Group side on related to circular economy. Even our microfinance company, for example, Arohan, does has a particular product around financing of carbon efficient, climate efficient products like solar lanterns, etc. In fact, it forms a significant part of our portfolio, and we are even able to generate carbon credits out of that and sell it in the market. So that helps to lower the cost of those loans as well. So across the group, there's a big focus on what we can do to promote circular economy. When it comes to the financing activity, I think it's still relatively early days, especially when it comes to India. So there are traditional instruments like equity, debt, the equity side of fund, and see that and there's so much activity that's happening that sometimes the valuations in these companies run ahead of the business. So we are finding it actually hard to get into some of these companies, right? Especially the ones which have at least some semblance of a business model. But again, I think the last estimate is that roughly about $18 billion of equity capital is already got into climate tech companies in India. And we expect this number to go 10x, 100x in the next 5 to 8 years. So there is already a lot of capital that is moving into this space, and hopefully, this capital will also generate a return, which will create a virtuous cycle, right? Which is what we actually saw in microfinance space, right? When we got involved, it was mostly a not-for-profit activity, but in fact, Aavishkaar actually set up a specific fund to invest in early stage microfinance companies. There were several other funds set up, and the success of these funds at the early stage actually attracted a lot of mainstream capital. So, the fact that this is a 3 lakh crore industry in India today is because there was success that was demonstrated by some of these early funds, right? And there was a lot of work that was happening at the same time in building the ecosystem. We set up MFIN, which is perhaps the first self-regulatory organization which works very actively with the RBI. It helps to absorb some shocks and helps to proactively work on regulation, which helps to promote the industry. So we would need similar efforts even in the circular economy if we have to grow this space. On the debt side, again, the Indian banks have unfortunately been a little bit of a laggard when it comes to. So actually, even in companies like we have in NEPRA, which is reasonably scaled, the banks are still very reluctant to lend, even though the company is profitable. Right? They're still talking about large amounts of collateral, and it's actually easier to raise capital from outside India for some of these initiatives, right? And the companies are profitable and can service debt. So unfortunately, but I think they're catching up now. So that's there. People are also coming up with innovative instruments. So the Ghaziabad Municipal Corporation has recently announced a green bond. Globally, there are about 40 odd green bonds that have been announced. So that's another form of financing that is getting popular. I spoke about the carbon credits. So how we are thinking about carbon fund. So there, we do expect this space to be close to about 4.5 trillion in value by 2030. And India by that time is expected to be about 8.6% of the global economy. If you take that, if you take that as the same proportion, roughly about $400 billion worth of financing is what will go into this space. So it's an extremely large market. It's going to get extremely mainstream, and those who are able to get in early, come up with sustainable business models will obviously create a lot of financial value in the process as well. So maybe I'll just stop here and take questions. I don't know how much time.
That's very good. Thank you for that. We have about another 10 minutes. We have about another 10 minutes for questions. If anyone in person in the audience here today or anybody online would wish to pose a question for Anurag, we can do that now. We have a couple of minutes for question and answers.
I'll take a shot at that. Basically, it's very interesting to see different dimensions of funding opportunities for this new transition towards circular economy. But as our main approach towards looking circular economy from a systems point of view, will it be limited to only individual ventures or individual kind of efforts, or would there be possibility for future funding in systemic level circular interventions, say for example, say circular cities? Would there be kind of new financial models or new financial instruments that would be interested to looking at the cities as the source of investment?
Absolutely. In fact, see, I mean, traditionally, when you talk about circular economy, nature-based systems, you're essentially trying to create a public good, right? So the initial capital that got into this space was basically coming from either governments or multilateral organizations, in the form of grants, etc. So the private capital actually came in much later, which we saw in other spaces also, right? As these spaces were evolving. I gave you the example of this Ghaziabad Municipal Corporation as well, right? So similarly, many others are going to, you expect many others to follow, where you're trying to design an intervention which is going to work at a systemic level. And the incentives will be designed, and somebody will bear the cost of that, that developmental activity, which could come from the governments or even, philanthropic bodies. And we are already seeing that happening. I mean, there are at least 40 green bonds that have already been floated, and essentially, in these bonds, link, just like these impact bonds, etc. There is a linkage to circular activity or reduction of carbon emission, and somebody pays for that.
So let me ask you a question, Anurag. So firstly, thank you for for sharing your experience and insights. So as a former banker myself, when in the days when I was in banking, there used to be something called the priority sector. Does it still exist?
Of course, it does.
Okay, so my question to you is very simple. So what would it take for this whole recycling industry, for everything to do around climate and circularity, to be classified as something like priority? Yeah, and is that a route that you think that would just make a greater, make finance more accessible for, for circulating economics. What's your view on that?
So I think it's only a matter of time because, it is in some ways a major priority. So, right, government is also very conscious of it. The Prime Minister himself has launched the Swachh Bharat mission, etc. Right. So I think it is already in the consciousness of the government. I think the problem with defining something in a certain way and giving tax benefits or some fiduciary incentives around that is of definition, because until and unless something is very tightly defined, all and everybody, even somebody who's on the fringes tries to take advantage of it. So if you can define it tightly, then those efforts, I think already, and this is where the neutral ecosystem bodies have a huge role to play on the advocacy side, and if you can do that, then I think it's only a matter of time before it will get classified as private sector. So and like we've seen in microfinance, right, the deluge of capital that will follow is going to be quite unprecedented.
Right. No, I've been following the microfinance story very, very closely. I completely get that. So it's voices like yours that will then really matter. In fact, a lot of voices, but you as being part of the industry to be able to speak up on issues like this. So I'm going to move to a second question. Yeah, for everyone who's an investor, for everyone, we've been hearing a lot about ESG funds.
That's right.
And it's been picking up. And there's apparently a lot of studies also that are being done on ESG funds. What's your experience just as being an industry professional? What's your experience with ESG funds? What is this something, are ESG funds actually giving an investor a higher rate of return? And what do we need to do to get consumers to bite into it? Yeah, so one way would be if I get a good return on investing in an ESG thematic fund, I will definitely want to invest. But what's the story behind it? What's the experience?
So actually, I forgot to mention that Aavishkaar also has launched an ESG first fund, which is actually focusing on ESG practices in companies, both in India and in Africa, who are exporting into Europe. So it's actually funded by a single LP who wants to promote ESG. So that's also one of our key initiatives from the fund side. But our view within Aavishkaar Capital has always been that ESG is something which is almost like a hygiene factor, right? That it should be there in every company, irrespective of where the funding is coming from. So irrespective of ESG fund or otherwise, we do focus on ESG practices in every company that we invest in, and that should become the norm. Now, what is happening, we believe, is also a lot of what is commonly termed as impact washing and greenwashing and all that. So a lot of people are getting themselves certified as ESG compliant and are doing whatever regular investing they were doing anyways. And ESG is almost like meeting the laws of the country, right? From our perspective, right? You should be environmentally conscious and responsible. You should not do any social harm.
Right.
So we almost look at it as a negative checklist when we are making investments. Right. That those things should be there. We in fact go one step further. We are looking for positive outcomes from our investments, right? Right. So our view within Aavishkaar is that ESG should almost become mandatory, like a hygiene factor. But if something has to get additional benefits or incentives, then it should be for creating positive social or environmental outcomes. So that's how we look at it.
And you have been able to generate reasonable
very early days, because that fund has just been set up. In fact, we are still, while we've got some anchor capital for that fund, we are still fundraising for that. At the same time, we are in a position to start investing from that fund. So it's still not made its first investment, but it's a very flexible capital structure, because it can do equity, debt, mezzanine, anything in between. So it's more of an experimental fund for us right now, but globally, more than $1 trillion is already ESG certified. So it's not a small space.
And what's your typical time horizon for any investment?
So it depends from fund to fund. So every fund would have
in your ESG.
So this is the 10-year fund, but this has the ability to rotate capital. So it can give, for example, it can give a deck for 3 years and that money comes back and can be deployed. Usually a fund at 10-year time frame where we invest in the first 5 years and harvest in the next 5 years. And usually our holding periods are about 5 to 7 years on the equity side.
Very good. Does anyone have a question for Anurag? I have one more question, but I'd like to give others a chance. So
Is there
anybody
something on that?
Shakti, I'm sitting across this barrier, but I have a question since I'm basically, yeah. And I've posted my question in the chat, but my question is basically, Anurag, how are your employees and business heads within the company being aligned with this practice and this vision? What is being done internally to bring everybody under this banner?
So firstly, there is alignment at the core because we don't pay well. So whoever joins us is interested in doing this work. So then only they come and join us, and then whoever joins doesn't leave. I am a good example, 17 years. And I explicitly said that I'll leave in 2 years. So, there is good alignment to begin with because, we do seek that even when we are interviewing people, that are we aligned on the larger purpose, right? Second, ensure that everybody is adhering metric in our even in our regular funds. As we track the financial performance of these companies, we similarly have a impact screen for every investment. There's just like you have an investment thesis for making investment, there is an impact thesis also for each investment. So until unless the team which is bringing that deal to the table is able to convince the larger team that about the impact thesis, it will not go through. The moment it goes through, there is impact benchmarking, and just like you have financial forecast, impact forecasting also for every investment, and then we track it. So the actual performance appraisal of that person is not just done on the financial performance of that company, but also on the impact performance. So we've sort of made it core to our internal evaluation, and we report it back to our LPs as well. So it's also how we are assessed as a firm as well. I hope I have answered your question.
You have. I have a follow-up question. Would you would you be open to sharing the? I mean, this practice sounds extremely integrated, and is there an opening for sharing this practice along with other companies who might be interested in learning on how the benchmarking is the impact benchmarking is happening, or how the appraisal includes impact performance? So if there is any other company who's interested, is it possible for us to kind of share this good practice with them and have you come in as a mentor?
We can discuss about that offline, but at a broader level, the impact metrics that we track, we do publish on an annual basis in our impact report. It's publicly available on our website. The impact internal processes and practices are actually well documented. Just like you have your HR manual, we have our IMM policies, which are well documented, and actually it even goes through audit. So if anybody is interested, we are quite open to share them, and happy to engage. I'm not sure which organization you're from. Happy to engage and see how we can collaborate and see. We learn from you and you learn from us.
Right. Wonderful. Yeah, wonderful. Well, I think we have to now move to the next item on our agenda. But Anurag, thank you very much. I really appreciate you're taking this time out to be with us today, and it was a very enlightening conversation. Thank you again. Sure.